Good evening, gentlemen. Thank you all for coming to today's investors meeting to be addressed by Honorable Finance Minister of India. I would now invite Shri Sanjeev Arora, Ambassador of India, to welcome the Honorable Finance Minister. Thank you. Ambassador.
Assalamu alaikum. Namaskar. Good evening. Excellencies, gentlemen, friends, it is a great honor and a pleasure for me to welcome His Excellency Shri P. Chidambaram, Honorable Finance Minister of India, to this investors meeting. His Excellency does not need any introduction. He represents a country of over 1.2 billion people and the world's third largest economy on purchasing power parity terms. Well, I would like to thank all of you for joining this conference this evening, and I would like to appreciate the cooperation of Doha Bank, especially its CEO, Dr. R. Sitaraman, in organizing this along with Embassy of India. Thank you very much. I'll request Dr. Sitaraman to say a few words in welcome of Honorable Finance Minister. Thank you.
Your Excellency, Honorable Finance Minister of India, Mr. P. Chidambaram, Your Excellency, Indian Ambassador to Qatar, Mr. Sanjeev Arora, Additional Secretary, Mr. Shaksikant Das, distinguished guests, Your Excellencies, ladies and gentlemen, it is a pleasure and privilege for me to be an integral part of this important evening. As you know, India, with the changing face of the world, changing face of the financial service, today India is an integral part of the global governance. The substance and substantive compliance India has demonstrated has been the telling story for us to see. India is an integral part of the decision making of the global governance. One of the chief architects in redefining India is His Excellency Honorable the Finance Minister. The transformational policy framework he brought in when he was a Human Resource Minister, and again with the change in phase of his portfolio in terms of commerce, liberalizing, empowering a businessman, and again when he was the Finance Minister, he was instrumental in redefining the tax rates and watershed moves, clearly demonstrating how India is integrating in substance and form. With the recent realignment in the functional framework since August, India has liberalized in terms of media digitization 74%, and again aviation 49%. You have seen the reflection in terms of business combination, and again multi-brand retail are all initiatives which are responsive to see India is the safest investment destination. And again, there are many initiatives which are in pipeline, whether it is pension or insurance, or, and again, redefining the finance bill itself. It is going to be an exciting marketplace for all of us to see India is the safest destination. Clearly, the governing evidence is to see the econometrics, and he is confident is going to demonstrate to you how India is, for the Qataris, the right destinations. For the sake of the Minister, I would like to say, country of Qatar is jewel in the GCC, extraordinary vision in terms of political progression, social progression, and economic progression. Qatar and India are bilateral partners in multiple trade, investments, banking, and finance. It's my great honor and privilege to welcome His Excellency the Finance Minister of India, Honorable Mr. P. Chidambaram. Ladies and gentlemen, the Finance Minister here. Thank you.
Excellencies, distinguished guests, Mr. Sanjeev Arora, the Ambassador of India to Qatar, Mr. Sitaraman, Chief Executive Officer of Doha Bank, Mr. Shaktikanta Das of the Ministry of Finance, Government of India. Let me say how happy I am to address you this evening, and I'm grateful to so many of you, especially businessmen from Qatar, who have accepted our invitation to attend this meeting. Let me begin by thanking Mr. Sitaraman, the Chief Executive Officer of Doha Bank, for joining hands with the Embassy of India to organize this event and host this event. This is my first visit to Qatar. I've had a full day meeting with His Highness the Emir, His Excellency the Minister for Economy and Finance, and other senior officials of the government of Qatar. I've also had an opportunity to drive around the city, and I'm deeply impressed by what you have built in the last 20 years or so. I also visited the Museum of Islamic Art that captures the great art and traditions and culture of the Islamic world, especially the Gulf countries. In 20 years or so, you have built a great city, you have built a strong economy, and you have built a country of which you can be truly proud of. And you have done this out of what was virtually a desert. I compliment you on your hard work, your perseverance, your dedication, your determination. And now as you reach out to the world, to other countries that are friendly countries, to other economies which can complement your economy, I come here and extend my hand of friendship and cooperation to Qatar and the people of Qatar. India is a very different country. It's an old civilization, but a young nation. We won our independence 65 years ago, and we have to build a strong economy for 1.2 billion people. It is not an easy task, but it is a task that we must accept. It is a task that we must undertake with determination. Since 1991, India has embarked upon a very different path. A path that will lead us to an open and liberal economy. We have made tremendous gains. There can be no doubt about that. Millions of people have been lifted out of poverty. Yet, there is much to be done. There is miles to travel and many more goals to be achieved. We do this with the firm belief that an open, democratic society that values freedom, that respects human rights, that abides by the rule of law, that is a peaceful and friendly neighbor So all the countries around it, and that wishes to be a force of peace in the world, can build a strong economy for its people. Since the turn of the century, we've had very high growth. Between 2004 and 2008, our growth rate averaged over 8.5% a year. On a large GDP base, to achieve a growth rate of 8.5% in 4 successive years was no mean achievement. Then came the world financial crisis. Like every other country, India was affected too. We responded like most countries. We responded through quantitative easing, what we call stimulus packages. Government spent money. That brought us high growth rate, but it also brought with it a couple of disadvantages. The first was a high fiscal deficit. The fiscal deficit that had been contained to below 3% in 2007-8 crossed 6% of GDP. The second consequence was it led to high inflation. High inflation led to a tightening of monetary policy, and the tightening of monetary policy led to a slowdown of the economy. As a result, in the last 2 years, the economy slowed down. The Eurozone crisis did not help. In fact, it made matters worse for the whole world and for the developing countries. Our growth rate slowed down to 6.2% and 5% in the last 2 years. We have taken a number of corrective measures. We have made it clear that we will get back to the path of fiscal consolidation. Red lines have been drawn, and I have made it clear that these red lines will not be breached. Whatever it takes, we will not breach these red lines. The fiscal deficit will be brought down by 60 basis points every year until we go below 3% in 2016-17. I've kept my promise in the first year. The fiscal deficit was contained as we had targeted. In fact, we did a shade better. And going forward, we will continue on the path of fiscal consolidation. We also took a number of steps to contain inflation. They have begun to bear fruit. When the figures for April 2013 are published, I expect that core inflation will be near zero. Wholesale price index-based inflation will be below 4%. We are now in the zone which the Reserve Bank of India would regard as its comfort zone. And I'm confident that going forward, we can adopt a more liberal policy to stimulate growth. In 2013-14, all analysts estimate that growth will be 6% or above. Our own estimates place growth between 6.1% and 6.7%. That would be a big step up from last year's 5%. Am I satisfied? No. India cannot be satisfied with 6% growth. India's potential growth rate is 8% and above. We need 8% to lift many more millions out of poverty. We need 8% to throw up the revenues that are required for spending on health, on education, on infrastructure. We need 8% to create the millions of jobs that are required to absorb those who enter the labor force. And therefore, until we recover and until we regain the high growth path of 8% and above, we cannot remain satisfied. I'm confident that this year we will achieve a growth rate of 6% and above. Next year, we will achieve a growth rate of 7% and above. And the year after, we will achieve our potential growth rate of 8% and above. In fact, there is great merit in moving up the ladder rung by rung. But that alone would be non-inflationary. We can get back to the high growth path without stoking inflation. There are, of course, a number of things that we have to do. Top on the list is building our infrastructure. The infrastructure requirements of a city like Doha, you have found that even a city like Doha requires huge infrastructure. You continue to pour money into infrastructure. You continue to build roads, bridges, schools, hospitals, airports, seaports. We have to do it many times over. We have estimated that we need $1 trillion in a 5-year period from 2012 to 2017 for infrastructure alone. Roughly 1/2 of this investment will come from the private sector. The other half will come from public sector enterprises and government revenues. We have done our sums. We are confident we can raise this $1 trillion for infrastructure. We welcome foreign investment. Our own savings are not meager. Our own savings are quite impressive. In the worst year, 2011-12, our domestic savings was 30% of GDP. In the best year, our domestic savings were 36% of GDP. So let's pick any number between 30 and 36 and add to that foreign investment, foreign inflows, and I'm absolutely sure that we can get back to the high growth path. We welcome foreign investment, both foreign direct investment as well as foreign institutional investment. Foreign direct investment in India has always been healthy. In recent years, in 2010-11, we had nearly $35 billion of net FDI. And in 2011-12, $46 billion of FDI inflows. The opportunities are immense. Take any sector. Roads, airports, seaports, steel, mining, power, automobile, two-wheelers, consumer goods. Take any sector. Every sector in India can absorb billions of dollars of investment. Likewise, we welcome foreign institutional investment, both in equity and in debt. In recent months, we have taken a number of steps to make it easier for investors. As far as investment in equity is concerned, long-term capital gains, that is, if one holds equity for a period of 1 year or more, that is considered long-term, and there is no tax on capital gains. It is a zero tax regime. For investment in debt, we have reduced the withholding tax from 20% to 5%. There are few jurisdictions in the world which have such low tax rates for foreign investors. I therefore welcome you to invest in India. Invest as FDI, invest as FII in equity or in debt. We have in place new instruments that are attractive. The first is in the infrastructure debt funds. Infrastructure debt funds have been floated in order to mobilize debt capital. And the IDF, the Infrastructure Debt Fund, will take over projects which have completed the construction phase and they have begun to earn a stream of revenue. The IDF will do takeout finance, take over the portfolio of the banks, release the banks, and then lend to the project for the remaining 20 years or so. The stream of income is guaranteed by the government. The IDF is an ideal instrument for foreign investors to invest with a great degree of security, very, very attractive rates of return, and almost no chance of failure. Likewise, we are in the process of setting up the first public sector exchange traded fund. We have a number of blue chip companies in the public sector. We hope to take a certain number of shares from each public sector company, bundle them together, set up an exchange traded fund, and the ETF will issue units to investors. These are well-performing companies with sound management, large cash balances, huge capex program, and a splendid uninterrupted record of earning profits and declaring dividends. These companies will now be available in the form of units issued by the exchange traded fund. Many more initiatives are underway. All these initiatives will make India an attractive destination for investment. I invite business persons from Qatar. You have the resources, you have the management skills, you have experience of managing large projects and large funds, you have the experience of dealing with large companies of the world and many other countries. An ideal place for you to invest would be India. India and Qatar have close relations going back many centuries, when trade flourished between India and the Gulf. Between that golden period and now, there have been various developments. But now, the advent of the new era, an era of openness, an era of cooperation, an era of international business, I think the opportunities for Qatar and India to work together are immense. I invite you to India. I invite you to visit India. I invite you to explore the opportunities in India. I invite you to invest in India. Once again, let me thank all of you for your gracious presence, and in the next 20 minutes or so, my delegation and I will be happy to take any questions that you may have. Thank you.
Thank you, Honorable Minister, for a most enlightening address. Well, Finance Minister would be glad to answer a few questions. May I request those who wish to ask questions to be very brief and avoid making long statements. So, well, the floor is open for questions.
Yeah. I work for an investment house here. I'm from India originally, but I work here. The concerns they have, one of the concerns which they shares with, I want to share with you, and it was not addressed in the address of yours, is the litigation process. You know, the conflict resolution. The time it takes in India makes them worry to come to India to invest money in India. So this part, I don't know how India can solve and present it better way.
Well, you must remember that India follows the Anglo-American system of jurisprudence, which means we have a hierarchy of tribunals and courts. Now, be it a tax dispute or be it any other commercial dispute, if you resort to the courts of India, you have to go through that hierarchy. And I can tell you, through my interactions in the US, in the UK, and in many other countries, the time taken to finally resolve a tax dispute or finally resolve a commercial dispute through the court system in India is no longer than in the US. However, there is an alternative dispute resolution mechanism. India is a subscriber to UNCITRAL. India has an Arbitration and Conciliation Act. We encourage parties to go to arbitration. In fact, most agreements, commercial agreements in India today have an arbitration clause. We accept international arbitration. I want to underline that. We do not insist that arbitration must take place in India. We accept international arbitration. Parties can choose any venue in the world as the center for arbitration. It can be London, it can be Singapore, it can be Hong Kong, it can be Tokyo, it can be Doha. You can choose any venue for arbitration. And an award given in a venue outside India is treated as a foreign award and is enforceable in India. No Indian court can interfere with such an arbitration process. No Indian court can question a foreign award. The foreign award can be enforced in India through the courts. In fact, many disputes have been resolved through the ADR mechanism. See, what appears in newspapers and what makes news is a dispute that is traveling through the Indian court system. But for every dispute that travels through the Indian court system, there are dozens of disputes, commercial disputes, which are settled by arbitration anywhere, either in India or outside India. So I want you to remember that India is a party to the international rules of arbitration. We accept foreign awards, we respect foreign awards, and we enforce foreign awards.
How do you answer questions related, particularly from foreign investors who say that transparency is an issue in terms of decision making as relates to, particularly with FDI in certain infrastructure sectors and so forth, the transparency of decision making on how bids are awarded and so on. How do we improve on either the process itself or the perception of the process itself? And in line with that, there's also a perception in my discussions in this region and elsewhere that some of this is also dependent on the government in power at any given point. And therefore, the process of getting into the country on an FDI basis becomes more challenging. How do we resolve those issues and make it more transparent for foreign investors?
Well, I think there are two parts to your question. The first is the process of an FDI investor entering India. The bulk of the FDI, and I gave you the numbers, the bulk of the FDI that comes into India comes through what is called the automatic route. No approval is required. You have to simply invest in India and inform the Reserve Bank of India that you have brought in so much money and you are investing in such a company. It requires no approval whatsoever. Let me repeat that. The bulk of the FDI that comes into India comes through the automatic route, which requires no approvals. There's only a small number where you require a special dispensation in the FDI policy, or where there is a deviation from the existing FDI policy, or in half a dozen sectors which require prior approval. For example, defense is a sector which requires prior approval. Those cases are so few that the Foreign Investment Promotion Board meets only once in 3 weeks or so. Where an investor wants a deviation or an exception or a departure from the laid down FDI policy, he has to approach the Foreign Investment Promotion Board for approval. And that is a high-powered board chaired by the Secretary to the Ministry of Finance. Its decisions are made public. Its decisions are put on the website. Its decisions are made known to everybody. In fact, to the best of my knowledge, there has not been a single occasion where anyone has challenged the decision of the FIPB in a court of law as an unfair or an unjust decision. The second part of your question is relating to awards of contracts. What you are asking, if I understand you correct, is how does the foreign investor get confidence that in awarding contracts, government will act fairly, government will act without discrimination? Today, all contracts in India have to be awarded only by a process of bidding. There is no question of nominating anyone for a contract. It can only be by bidding. In every case, we float an RFQ. And then after qualifying the intending bidders, we float an RFP. And a selection is made through a rigorous process after the proposals are received. Now, invariably, there will always be more than one loser for every winner. A contract can be awarded only to one bidder. The others will be disappointed. The disappointed party will indeed say that the process has not been fair. But that's a fact of life everywhere in the world. We follow a transparent process of RFQ and an RFP, and a selection is made. India today cannot hide its decision-making process. We have the world's most exhaustive Right to Information Act. Every document of government, every decision, every file is open to inspection. There's nothing we can hide. A disappointed party can apply under RTI and ask for the process by which A was selected and B was denied. We have a court of law in which decisions to award contracts can be challenged. In fact, they have been challenged. We have a Comptroller and Auditor General who audits the processes of government and finds fault with us. Therefore, there's very little that we can hide today. And I think the best assurance of transparency is that you cannot hide anything. You may be able to hide it for a few days, but you can't hide it beyond that. I think the Indian processes are becoming more and more transparent. And on the anvil, we have a new law in the making, the Public Procurement Act. The bill is being drafted. It has gone through the various processes. I'm confident Parliament will pass it shortly. The Public Procurement Act mandates us to follow very, very transparent processes. And above all, if any investor has any kind of apprehension or grievance that he's not being treated fairly, he's most welcome to come and meet any one of us. And we can explain to him how the process is conducted and how the final decision is made.
We have many business leaders from Qatar. I'm sure they have many questions. Please, Excellencies.
Good afternoon, Your Excellency. Good afternoon, distinguished panelists. My name is Nawaf Al-Thani. I have a simple question. We see QIA investing all over the world, and they have taken a lead in emerging markets, but we see them a bit shy in India. What are the causes, you think? QIA as Qatar Investment Authority.
Well, I think it's a lack of information. Partly the fault is ours because we have not provided information. And therefore, in my visit today, I have assured the QIA and other senior officials of your government, including His Highness, that we will make available information about specific projects. There are a number of projects which are underway or which are approved or granted in every sector: road, port, steel, power. And we are willing to share information about each project and invite QIA as well as Qatari business houses to invest in specific projects. Take, for example, the Delhi-Mumbai Industrial Corridor. Just give me that passage. The Delhi-Mumbai Industrial Corridor is a gigantic project. It's supported by the Japan government, JBIC. It connects Delhi and Mumbai. It spans a length of 1,483 kilometers. There will be 3 seaports, 6 airports, 9 mega industrial cities, a 4,000 megawatt dedicated power plant, a 6-lane highway. All this is being built. Many people are coming and investing in one or other of the sub-projects of the project. Now we can share information about the power plant, about the 6-lane highway, about the industrial city, about the seaport, about the airport. And you can take equity in any one of these projects and implement them. Likewise, I'm just on my way back from London. We have just agreed with Britain that they will join hands with us for a feasibility study for the Bengaluru-Mumbai Industrial Corridor, which will be as gigantic as the Delhi-Mumbai Industrial Corridor. Similarly, we have opened oil fields for investors, for exploration and excavation. We are willing to enter into public-private sector partnership for operating coal mines. We are now awarding power plants, road projects. There are dozens of road projects which are ready for award. We are awarding them. There are dozens of projects in shipping sector, berths, facilities and ports. 2 new seaports are being planned. Therefore, depending upon your interest in any sector, we are willing to have our officials sit with you and explain to you and present to you the opportunities in that sector. I think the fault is ours that we have not communicated the specific projects to QIA, but I have promised to remedy that, and I've invited QIA to visit India, and we will give them specific projects in which they can invest.
Any other questions? Well, thank you very much once again. Thanks to all the organizers, my colleagues from the embassy, Dr. Sitaraman and his entire team, and thanks to all the participants at this investors meeting. And the biggest thanks to Honorable Finance Minister of India. And I would also like to thank Additional Secretary Mr. Das and other members of the delegation accompanying the Finance Minister of India. Thank you so much. Thank you.
Thank you very much. Thank you.